Slow markets often lead to good conversations, and that's exactly what we did this morning in my live trading room. So today I want to share with you some of that footage where we spoke a little bit about strategy development, and we laid out 5 filters that beginner traders can look for when thinking about developing a trend continuation strategy. Let's hop in. This was one of the first trend continuation strategies I traded, called the Fibonacci Failure Trade. It was a simple strategy where it's like, after an extension, look for pullback. The zone in which we were to take the trade was between the 382 and the 618. Stops were below the 618 or beyond the 618. And if we got our reason for entry in here, we would trade it up with first targets looking for a move to the 127 extension. So something like this. And then what 618 was the second one. So yeah, I see nothing wrong with doing that. Did you use a limit order or buy at market? I bought at market after an entry reason. So I don't think putting an aggressive limit order there is a great idea. Just because, and just based off my knowledge of the market, I think there's going to be so many times where this thing just continues to pull back and you would just get skunked out of the market. So I think being that aggressive is probably a bad idea. I'm always a believer of waiting for the market to predictive in our analysis, reactive in our execution. So waiting for the market to get to that level and then waiting for the market to give me a sign at that level. And there's millions of signs, right? You can be super aggressive where it's like, hey, maybe I get like a single pin bar and that's my sign. You could be more conservative. Maybe I need a higher high, higher close. You could be more conservative. Maybe I need a double bottom. So you can still be aggressive within your sign, but I'm always a fan of waiting for the market to give me a clue, yeah, versus a limit order. Right, and of course you can add other things to it as well. You can add RSI, right? What did the RSI do in that pullback, right? Did the RSI go overbought? Did the RSI give hidden diversions? There's another thing too. We haven't talked about this in a while, but we tend to do it every year. You guys remember the RSI zones idea? You long time live roomers, we'll just do 60-40. Long time live rumors notice, right? So pretty much there is a theory from a book that you should never ever read that you can tell the trend by just looking at the RSI and not even the price chart. And pretty much if the RSI is traveling between this area, it is considered bullish. Where is my... oh, there it goes. Sorry, I want to change the color. If the RSI remains within this zone, it's bullish. If the RSI remains in this zone, it's bearish. So pretty much on that pullback trade, as price action pulls back to the level in which you're looking for it to pull back to, if that RSI remains above this 40 level, and this can also be 33, but we're doing, you can do 60-40 or you can do 33-67 because we want to avoid the double sixes, or 66.7, I should say. That could be a confirming indicator. If you get your pullback and then it violates this level, then that could be one of your filters that say no longer take the trade and wait for that bearish rotation. Yeah, I see nothing wrong with entering at a shallower pullback. It's just not something I can do because I don't trade for the extensions. Rather, I just trade for a retest of structure. But a strong trend should have a shallow pullback, so that would make perfect sense. That would make perfect sense. The DAX. I love the DAX. Yeah, no problem. Oh, here's an example right now, man. Was this a 382? So here would be a perfect example, right? So price action came right? You can even actually do a bigger one like that. We just hit 3D2, right? We came up, violated, right? A level of structure to the upside, pulled back. You guys see any reason for entry that you can use? Higher high, higher close, right? Pin bar, bow, higher high, higher close. Another, not a strong one, but it ended up still working, right? So what do? Well, entry right there, target or stops below the low, right? We talked about targets being that 127. That's going to stop right at a 127. Fibonacci extension, swing low to swing high. And back down. Oh no, not quite. Oh no, yeah, I was right. Yeah, come on, trust your eyes, Akil. Stopped right at a 127. That's your Fibonacci failure trade. Or I should do this. Your stop loss below the 618 if you're doing the Fibonacci failure style. So that gives you a lot less risk reward. If you're doing an ATR, you're probably going to be around here somewhere. But yeah, that's your Fib failure trade right there. Now, this one, Ann, actually lines up with structure as well. Now, again, so you have structure confluence with this one is too. Now, here's an example of why I wouldn't be able to take it, right? Me not being a trend continuation trader, entry could be the same, stops can be the same, but where do my targets need to be? Who remembers? At the high. So like, look at this. Bang. So I just can't enter trades that are that shallow. So, but yeah, perfect example there on the DAX. Good old DAXy. Do we see two more in here, guys? Do we see two more? Maybe not 3D2, but structure. Look at this. Huh. Higher high, higher close. Retest the structure. Now here's another one. Entry reason right here at the high. Akil would need to take targets right here. Not gonna work out in my favor if you're looking for a 127, however. Bang. Not going to be the greatest risk reward, but you still get more than a 1-to-1 there. And then what do you do after that? Who can tell me what you do after that? Well, we got another trade setup, don't we? Yeah, right? Because this is a higher high, higher close. All right. Let's go steal this fib guy. Oh, wrong one. Whoop. Let's steal this fib guy. Boom. Boom. There's your 3D2. Here is your new higher high, higher close right there. Stops below those lows. This one looks to be 127 and maybe 1618. Fibonacci extension, excuse me. Swing low, swing high, back up. Another 127 hit. Bang. And just got two winners back to back. And then what you do? Well, wait to see if this breaks. And if this breaks, do it again. User said this looks very profitable. Yes, but you have to also keep in mind this is, and I did trade like this as a day trader. So as a day trader, I did take continuation trades. So like 5 minute, I would do this all day. The problem, yeah, you got to be at your screen. That's one. The problem is when the markets are going sideways, and this is the quote I always use in my videos, you are probably going to get beat to death. So the DAX tends to be directional, but there are periods where you get caught in this area where you're going to get all types of pullbacks that maybe don't work. So trend continuation traders, they have to be able to survive this stuff. So that's the tough part, where the markets get sideways and they don't necessarily expand the way you think they're going to expand. Now I'm curious with both of these entries, do we stay above the magic lines, right? So let's draw that. Let's draw that 40 level in. It does look like it, right? So entry 1 definitely above the 40. So that could have confirmed that or been used as a filter. Entry 2 definitely above the 40. Other things you may want to use, right? Maybe use indicators, right? Can someone give me their favorite EMA settings so I can put them on? I'll do 2 of them. Someone shoot me a double EMA, 2050. So 2050 will definitely be above them. Certainly. 20. Bang. Thicket. And 50. Oh, I keep hitting the wrong thing. 20 and 50. Let's make this pretty in pink. 50. So that's something else you can look for if you're an EMA person, right? Do we stay above our EMA? EMAs, plural. Well, we have signal 1, which is right here. We certainly do. Signal 2, which is right here. We certainly do. Other things we may want to use. Let's throw on probably the most famous under the chart indicator. You can tell me what that is. Most popular one. No, not the RSI, but thank you. MACD, yeah. 90s rap star. Nope, not that. Darn it. MACD. Get out of here. Delete you, right? MACD. So a couple things we can do with our MACD, right? I like to simplify it, me personally. It offends many MACD users, but there's different ways to use it. I like the histogram because it looks cool, but we'll get out of there. Signal line will get you out of here. 0 line, that's important to me, so we'll make you better looking. And then the star of the show, MACD. So as a filter, simple thing. If MACD is above 0 line, bullish. If MACD is above below bearish line, bearish. Yeah, I just killed the buzz for you, right? So entry right here, is MACD above 0? Yes, okay, confirmation. Entry right here, is MACD above 0 line? Yes, entry confirmation. That's all. I'm sorry if you expected something else. That's all. So that's another alternative if you don't want to use, say, moving averages. One more thing. Let's throw the SSL channel. It's always fun. We can throw Bollinger Bands on there, maybe. Maybe that can be used as some sort of target area where you take targets, and this would be active trading, right? So a few things here. One, let me just delete some of this stuff. One, you had the break and close above a Bollinger Band. What am I showing? A Bollinger Band? Yeah, Bollinger Band. And then you had the retest right there. And honestly, with Bollinger Bands, I don't have it showing, but you can bring in a moving average as well in the middle of that if you want to use that as confirmation. We stayed above that moving average, right? And then maybe targets, instead of looking for just the 127, or maybe an alternative to the 127, right? An and or type situation where you look to take it once price, once again, closes above a Bollinger Band. Now in this situation, it's the exact same thing, but maybe sometimes it gets you out of a trade earlier. Maybe sometimes it keeps you in a trade later. I don't know. I haven't tested all this, but just theories. Let's look at the second one right here. Again, retest, stay above the moving average. Your 127 is right here, so that's where you would have been taken out of the trade with 127 targets. Here's a spike of a Bollinger Band, and then here's your close right here. So maybe this is where you remove yourself, which looks like you get a little bit more meat instead of exiting right here at the 127. You exit right there on the close above the Bollinger Band. Or you can You could do both. Maybe a first target is the 127. A second target is the close above the Bollinger Band, right? So there's so many cool things you can do, guys. Once you know different stuff. And I know this may seem confusing for many, but this is from what, 19 years in the market. Let's say 15 years in the market, because the first couple of years I know what I was doing, right? But this is from just lots of strategy development. So like, I've tried and failed with many different strategies. You guys understand that? I've tried and failed with many different strategies, but I don't look at that as negative experiences, because during all those failures, I've found certain things that have worked, and then I've experimented with certain to see how certain things work, right? So although a strategy, entry, stops, and targets and filters may not all work out, there are certain things that I've discovered where it's like, hey, this is a good entry technique, or hey, this is a good entry filter, or hey, this is a good exit. So when you start building that knowledge base, you have moving averages over here, you have Bollinger Bands over here, you have MACD over here, you have weird RSI thing over here, you have fibs over here, you have candlestick entry over here, right? You have kind of all these ingredients into strategy development, and then all it is picking and choosing. What do I want my entry technique to be? All right, let's try this or let's try that. What do I want my filter to be? Okay, well, let's try this and let's try that. What do I want my exit indicator to be? All right, let's try this and let's try that. And you're pretty much mixing in the strategy development process. You're mixing and matching the parts, and then you're seeing, that tastes good. I'll keep that. Ooh, that tastes bad. Let's throw that away. And that's how you develop a strategy. So it does take time. It takes experience, but I say that because I want to encourage you guys. Whenever you try and fail, just because a strategy may not work doesn't mean it's a complete failure, because there may be something that did work. It just didn't work with the thing you were trying. And these are different techniques to experiment with. So I'm not just pulling this stuff out of my butt. These are stuff that I've experimented with in the past, and like, they haven't been completely junk. So I keep them around next time I do strategy development and see if it works with the next thing. So this stuff is cool. Yeah, maybe I'll try to isolate this recording and put it up for you guys so you guys couldn't see it. Today's a busy day, fundraiser. We're still in fourth. But maybe I'll do that. If I have time, I'll cut it up. Speaking of fundraisers, as many of you guys know, I'm not just a trading coach, I'm a track coach as well. And today is our team's big one-day fundraising event, where we're trying to raise as much money as possible for scholarships, for travel, for equipment, for meals, really anything that supports the student athlete. So if you have it within you to donate, I would truly appreciate it. Doesn't matter how much you give, as there are some really cool prizes, not just for how much money teams earn, but also the amount of donors that each team gets. And I'd love to qualify for some of those. So there's a link in the description box below that you can use, but once you get to that page, use the drop-down menu and select cross-country, track and field. That way you guys are donating to my program and not the other programs that we're in competition against, even though we're all on the same page, but it's a fun little competition. Speaking of competition, there's a cool little leaderboard as well where you can track where we compare to other teams. So I appreciate it in advance. Thank you so much. And until next time, plan your trade, trade your plan. Take care.